Each year you get an ISA allowance, which is the maximum amount you can save within a tax-free account. You can choose whether you want to invest the whole lot into one type of ISA or whether you want to split the allowance between different types, for example, between a cash ISA and a stocks and shares ISA. Just remember that even if you choose to split your allowance, you can't invest more than a total of £20,000 across the different ISA types each tax year. So, what if you change your mind? What if you have used your full ISA allowance by saving £20,000 into a cash ISA, but you changed your mind and wanted to switch to a stocks and shares ISA instead? Could you? Or you found a better rate of interest elsewhere. Could you switch? Well, the quick answer is yes, but here are 5 things to consider when you're thinking about transferring your ISA. Number 1. Never withdraw your money, unless you need the cash, of course. Always transfer your funds to retain their tax-free status. It's really important that you don't just withdraw the money, close the account, and reinvest the funds into another ISA. Transferring your ISA is key. Withdrawing rather than transferring will mean that you lose the tax-free advantages of that savings or investment pot. And if you have several years' worth of ISA savings now sat in your current account, i.e. more than £20,000, you can't automatically put it all into a new ISA because of the annual limit. You must transfer the account itself or the funds held within it, otherwise you're effectively starting over again. Number 2, you can transfer your ISA as many times as you like. That's right, you can change your mind more than once in any tax year. Maybe interest rates are rising and ISA savings rates are playing catch up. So over the course of a year, you might see a couple of huge hikes in rates being paid, and you want to get the best return on your savings. The ISA rule states that you're only allowed to pay into one of each type of ISA per tax year. However, you can transfer ISAs as often as you like because transfers don't technically count as paying in. So if you notice a better rate elsewhere, you can make a transfer whenever you wish. Remember that if you have a fixed term or notice cash ISA, you should check if a transfer out will incur an interest penalty. It's also worth noting that you can transfer previous year's ISA savings to a better account and open a new one for the current tax year at the same time. Previous savings aren't governed by the one ISA type per person per year rule. 3. You can transfer as much as you like. Only new money deposited in the current tax year counts towards your ISA allowance. You can transfer the current year's ISA subscription and or all or part of the previous year's subscriptions to your new ISA account. That's because transfers aren't governed by the usual paying in limit of £20,000 currently, so you can transfer as much as you like. However, there's one catch with transferring. If the ISA you're transferring only contains savings paid in during the current tax year, you must transfer the full amount to your new provider. Also bear in mind that not all providers allow partial transfers of previous year's savings. 4. You can transfer between different types of ISA as long as the account accepts transfers in. That means that the money held in a cash ISA can be transferred into another cash ISA or into a stocks and shares ISA. Likewise, assets held in a stocks and shares ISA can be switched back into cash should you wish. This may take more preparation than transferring cash ISAs, so make sure you speak to your provider and maybe a financial advisor. You can do the same with innovative finance ISAs and lifetime ISAs, but the process may be trickier due to the specific rules and factors of these kinds of ISA. I do have a video that explains these ISAs in more details, so you may want to check out that video too. 5. A cash ISA transfer is easy to do and should be completed within 15 days. It's simple to make the transfer once you've done your research to find the best rate and have made sure all applicable ISAs allow transfers. All you have to do is open the new account and complete a short transfer form with the new bank or building society. After that, it's all in the hands of the providers. They should complete the transfer process, and for cash ISAs will do so within, as I said before, 15 working days. And you should be compensated for any lost interest if the process takes longer than that. Transferring stocks and shares ISAs is a little bit more complex, but it is still fairly straightforward. Thanks so much for checking out my YouTube channel. My name is Justin King. I'm a chartered and a certified financial planner. And my aim is to help you live a successful life. That often involves understanding your money. I hope you've enjoyed this video. If you have, please press the like button. It really does help more people like you find my channel. I also host a podcast called the Retirement Cafe Podcast. You might like to tune into that. You can check out the description below or sign up for my weekly newsletter, which is packed with inspiration and tips for a successful retirement. For now, I'm Justin King, helping you live your best life.